and not sleeping now. So, Kemry, what has been your most frustrating moment that has got you doubting yourself in trading? How many of you like that question? Or is there any one of you that have not doubted yourself in trading? Why things are not working for you? Why you're doing beautiful analysis, you're following the plan, but it's not just somehow you just feel like it's not working. You get into that feeling of doubt. Let me tell you, I realized over time that if you trade your setups because you want to win them, you would lose them most of the time. Okay, most of the time you lose them, not because the setups are not good, because you are emotionally connected to the setups. And it affects you in a way we don't even know, but over time we can tell if we take a record. So trading is numbers. I need everyone to write that in the chat and I'll explain it. Trading is numbers. Success is numbers. Success is a data. Okay, write that on the chat. Let me know you guys are following. Okay, I have some trade ideas. I've taken some trades in Forex and I'll tell you why I took them. I'll show you. I've analyzed them since last week. Some of them got to better position today and I took them. I'm teaching myself something that it's taken me years to learn. And that's what I want to teach you. And that's what I'm teaching you. I teach you every day, but I want to state it. If you have a data of success, it means you've documented your trades. It gives you a certain number. It's the numbers that is confident. It means out of every 10 trades you would take, you probably would win 8 and you will lose 2. The data showed you won 8 and you lost 2. This is one mistake we make. In the data, you know what you won and you know what you lost. But the data doesn't reflect what you will win tomorrow and what you will lose. But data gives you confidence. So when you see how you won the 8, there is a feeling you will get. When you see the trade you think you want to win, there's a certain emotion you attach to it. And when you don't win that trade, you get disoriented. And you will become emotional about every other trade. And now you may miss the other 7 only to go get in on the 2. And you will lose more than your data because you were emotionally connected to the trade. Sentimental traders don't win the market. Logical traders do. Don't get sent. How can you explain that more, Kemry? So today or last week, you did 5 analysis. Out of the 5, you don't know the one you're going to win. But you got in your first 2, it hit your stop loss. And because you're overwhelmed, you stop trading. You did not take the other 3. And they went. What's going to happen next week? You will be trading next week based on the emotion of this week. So you are a roller coaster of your emotions continually, but most of you don't even know. But I'll tell you this, even in signals, a lot of people respond to signals like this. At the end of the day, you see a data or signal every week. We have 20 signals. We won 16. We lost 4. But the result of the students who are taking these signals are not the same. Why? Maybe their first trade was one of the 4. Their second trade was one of the 4. What's going to happen? They're going to start not taking the other trades. And at the end of the day, they will not have the results for the week because why? They probably only took 4 trades. They lost 2 and they lost because why? They got involved. This is what you want to do in trading. Just trade. Just take the trades. Whether you win or you lose, just take the trade. And now manage your trade in your daily, all of your trades in your daily, weekly risk. So there is an advice I'll give to you. Some people were not here to get this, and I'm sorry. If you're here, this will bless you. If you are not yet confident of yourself as a trader, stop using the exotic risk to reward. Use under leverage risk to reward to get yourself confident. Kenry, what does that mean? You may probably say 1 to 3. You may probably say in a week, I want to risk 5% of my account. Okay. But that 5% of your account is related to trades. So it means if you spend that 5% in 2 trades, if it goes your way, fine. That's a better week. It means you did not experience every other thing in the week. It's a good way, but it's also very bad in the long run, because the things the other trades you were supposed to experience, because every of your experience you learn from them, you don't now have opportunity to experience them. Because why? You either have won the week or you've lost the week. So this is what I can tell you. There's an advantage in it, but there is a bigger disadvantage for those traders that are not yet successful, that are still struggling. So what do you do? 5% of the week, break it into how many trades do you think comes in the course of the week? If you have an average number of 15 trades or 20 trades in the week, okay, break your risk per trade to 40 trades. Allow space for more trades so that you can play with your entries. If you take 3 months, I'm not saying this because I know you guys will do it, but I can guarantee that anybody who does this would have a different result. Let your experience of practice show you your confidence. So, Kenry, what does that mean? If the average trade called every week is 20, I'll break my risk into 40. What does that mean? If I'm supposed to use a 0.1, I could go use a 0.01 for a trade. Okay. And I can take every trade at the end of that week. You know what will happen? I will get data I can study. And I can see how I can do better the next week because I experienced everything. Do you know that you are learning from every trade you're taking? From others, they teach you. And how you respond to this trade, they teach you. This is what builds confidence. So if you know, one thing you're going to experience that you're not losing how you're going to feel bad. Because why? You're not risking too much. And at the end of the day, you have risk left over. But most of the time, if the result of that group always wins every week, you would always win. Because why? You took all the trade. Are you guys getting what I'm saying? You took all the trade and you didn't risk too much. You may not make a lot of money. Give yourself 3 months. If you do that confidently for 3 months, you'll find out that you did not make as much as you thought you should. But you would also notice you made more than you used to make. Many of you blow accounts. But you find out that if you do what I'm telling you right now, you will not blow an account. Because why? You are experiencing knowledge on a very swift environment. Did you guys get what I said? If you guys got what I said, if you understand what I said, put 10 on the chat. Okay? Put 10. I would have gone a little notch higher, but you guys are not there yet. Okay? Put 10 on the chat if you got what I said. Give yourself under leverage opportunity to leverage opportunity. So don't use high risk. Don't just try to pass that evaluation account. Name your account experience account. Under leverage. There's power in under leveraging. Why? Because it reduces your expectation. And when your expectations are reduced, your emotions are managed. And now you can experience knowledge without interfering. Okay, that is what I wanted to add for traders. Okay, we send trades every day. How many trades have been sent this week? This day already. Okay, so someone say, "Oh, this trade that Kenry said, should I take it? I've already taken Emmanuel."
So, Kenry, what has been your most frustrating moment that has
Emmanuel's trade, or I've taken Wealth trade? Oh, should I still take this trade? Now, when you're taking all of this trade, don't take trades that you do not have room to take more trades. And also don't take trades that you don't take every trade infringing on your future risk. So I just shared with you how you can manage your risk by under leveraging so that you can take every trade without judging yourself. So I missed this trade. Oh, the one I did not miss, that's when I lost. Just experience all the trades. So under leverage, okay? Under leverage your account. use a zero. See, if you have a 30K account, use a 0.02. There's no way you would take 20 trades and you will break your risk for that day or for that week. But what will happen is you would be so confident of all of the trades. The day we lose, you lose. The day we win, we win. You get a data of our winning and losses, and you would learn from them. And there will be no space for you to doubt yourself that, oh, I don't know what trade to take. I don't know. You will not be there. You will not be in that valley of doubt anymore. All right. Put 100 on the chat if you guys got that very well. Okay, so what are the trades that I've called? What are the trades that I'm looking at this week that I took? So USD JPY has broken my valley again. I'll be like, should I still get in this trade? It's frustrating me, but I got in because why? I trade my analysis and I forget the outcome. All right. So I told you guys last week when I analyzed that if this market hits here, it's going to go. It hit, but it didn't go. I'm in this trade here. Okay. I'm in this trade here. And it dropped down. So I'm in negative. It's painful. But guess what? Does that mean I'm not going to take the other entry? It did. It hit and it rejected. So this was a rejection. Okay. And I'm in. All right. And this trade has the capacity to get here. So if you're feeling excited, this is a swing trade. You can put your, so now I use the smallest stop loss, which is this. Normally I'm supposed to use this stop loss, but that's way over 400 pips. But I'm just hoping it goes with it. So I gave you guys the stop loss, but I'm actually using the stop loss. Because why? This trade, now, this is a third wave. I told you guys that when it breaks, this is a third wave. That's why I put this is the shift. And market structure based off on this data, this daily liquidity, it rated, okay, climbed, moved, came here. Since this didn't take this away, I am hoping that this will take it to the moon. Okay. So the TP is 1:6 ratio. It means if you're using this, you're going to get 6 times of it if you get all through here. But there's a TP level here. So I'm just giving you the trade and why I'm taking it. All right. So I've taken this trade. So this trade is still going to be valid for a buy. This is still a bullish trade. The next time I'm going to wait for, the only time I'm going to be looking for a sell is when market get here. So here is a buy level. Here's a buy level. Just a moment. Just a moment before questions. So I'm still in my buy range because why? The market is on discount. So I'm buying. Okay. If this takes away this, now I'm going to wait. So if this takes away this low, it means it has changed the course of character. Has changed character. I'm going to wait. It may go back. If it doesn't go back, I'm going to now be waiting for a rate of this area for me to buy. Okay. But I am hoping this goes. So that is my expectation on GBP, USD JPY. Mr. Ra, I'm going to take your question. I'm just trying to explain. So if you are here, you can actually get in on the trade for a market execution now. Okay, put your stop loss at 143.91. Okay, and your first day profit is going to be at this lower level. So that's going to be probably 1-to-1. Okay, 147.6. I already called the trade in the chat. Overall range TP is going to get here. Where did I get that range? Just a moment. So the range of the trade is, so this is a daily liquidity. It went up to this area. So, so there's a range here, climbed up to this area. So that, I believe that's where I have my TP. Yeah, that's where I have my TP. So that's the range of the trade. It may go, it may not go. That's fine. But daily is just setting up. So whilst we're looking at this trade on an hourly, it's just creating a second low on the daily. And if that happens, just imagine if a daily closes here and opens a new day. This is guaranteed. We are getting in early because of the smaller time frame, but the daily has not really set up. If this closes here, oh boy, I know this is guaranteed. So yeah, that is GBP, that's USD JPY. Oh man, why you guys are raising your hand? Is there anything? Okay, let me, since you guys want to tell me something, hold on. Maybe I'm doing something. What was it? Is that a question? Bro, you want to ask a question?
We can't see your screen, coach.
You serious? You serious? You serious? Oh boy, I feel sad. What did I share? What did I share? What did I share? Oh, I shared the wrong screen. Oh, so I have to start again. All right. Okay, good. So I have to go back. It's sometimes frustrating. All right. So I told this, you guys heard what I said, right? So this is a buy. There is actually a buy. Okay. I bought USD JPY because I've analyzed this market before. I said if it gets here, I'll buy. This can be a buy, but I perceive it can also get down here for a buy because this is the shift level. Okay. So this is the second shift and market dropped into the first shift, and I'm buying here right now. So this is the stop loss, tiny stop loss. The major stop loss is actually, so I'm using this. Okay. I use this, but I'm also using this for other entries. Okay. Because why? That is the low of this. What is going to take this trade on a swing may actually be this low. But if you want to reduce your risk, okay, you can use this stop loss. So I already called it. Stop loss is 143.91. Okay, entry, you can do market execution right now, 146.14. And take profit one is 147.65. And the overall TP, this is recorded, okay? The overall TP is 149.45. Okay, so that is it's a swing trade. So I know that now that I'm in, it can run for the next 2 weeks, 3 weeks. I don't care. But I know that if I take my TP1, every other thing is going to be running through the course because the market is just set. It has done on the hourly, it has done wave one. Okay. Wave two, this is actually the third wave. If that accomplished, not taking this out. But if it takes this out, it means market is changed character. It may drop down. And I'm going to start looking for the next buy of this range. So that's why I showed you guys. Market is on the buy range on discount. Overall, USD is on discount. So this is a range and this is a range. This is the range we're trading right now. So if that is true, if it goes, it's going to get up. We have the opportunity to take this market up here. Okay, that is if USD allows a lot. Now, another thing I'd have to say before I even show anything, because while I teach you guys or share analysis, there are other things that people need to know about trading. Trading is not about your technical analysis. There is a part in trading that is affected by economics. A lot is happening in the world right now. Traders who are not cautious, see, many people will blow account this period. Not because they don't know how to trade. There is an outcome we cannot detect, we cannot oversee, okay? And one major outcome that is, nobody knows the outcome, is the US election. See, you may be seeing the market is not doing well. It's not responding. It's not, neither is it mine. But does that mean we'll stop trading? We won't stop trading. Okay, just because I don't know the outcome of how, if Donald Trump wins or the bidding side wins, how it's going to affect the United States dollar. It affects all currencies because why? The United States dollar is not just US dollar. It's a global currency that detects commerce. So some people may be holding, some people may be dishing. A lot's happening that is not in our technical prowess to know. So hence, don't get overwhelmed when your market is not going your way. Okay, that's why I said just trade. There are seasons. Okay, some season may be spring, some may be fall, some may be winter. Just experience seasons, okay, and study them. So I do know that I'm in positions on USD JPY that are negative right now. Okay, but I'm taking more position. The only reason I'm not going to win my position is if I close them. I rather trade my position, let them close, or I win. That is it. I must experience the trade. Does that make sense? So I just said that to also tell people that the market is not consumed by just because you want to win it. There are factors. So I moved to a daily right now to show you guys this. If daily closes below this, there is a possibility that it's going to get here because market chases liquidity. If it has attacked this liquidity, it's going to probably come for this weekly liquidity. It means I will lose my position. That's fine. But guess what? If I cash this, This weekly run is going to take me back here, or probably to the 50% equilibrium. It means what I lost between here and here, I would gain if I ride the weekly. Okay, so find your position. I'm also sharing this because why a lot of people trade and the moment they lose in a particular pair, they hate that pair. No, watch the pair. All right. So USD JPY, there is a position here. If daily closes here, just know this is guaranteed. If daily could close here, at least market will move 50%. Okay, so I'm looking for daily is just selling. If daily could close today and opens a new one and tomorrow closes above this area, just know that that trade you took now, you can actually leave it and go and sleep for the week most of the time. All right, it's almost fully guaranteed. Well, I don't like using that word, but I can tell you that's what I feel about the trade. So that's USD JPY. I've called the trade. Hope you guys got the trade. I hope you guys got the trade. Put 10 on the chart. You got the trade. The entry is a market execution. The stop loss here, 143.9190. Okay, first TP is 147.65. Okay, overall TP is 159.45. Did you guys get it? So this is GBP JPY. I also got an entry on GBP JPY. I got a lower entry though. So yeah, I wanted this market to break retest here. So that's what it did. Broke, eventually came back, it retested, but didn't close. But since I'm yeah, I was supposed to take this trade. So this is what you can do. If market breaks above this area, you can take it, or you can actually just take it right now. The market is already in my buy area. So this is my stop loss. It's a long one. It's a long one. So you Cambry, how much stop loss is this? It's a whole lot. I swing. But 500. Now, when I trade, I don't care about the number of loss. I just care about the reward. I get the risk to reward. So what is the risk to reward? If I take this trade right now, the range is 1 to almost 1 to 2 plus. Okay. But I under leverage it. So 500, I could use it 3 times on the leverage for this trade. Okay. And this stop loss, it's not even the best stop loss. The best stop loss is actually below. When you're trading market structure, you use the lowest low as your stop loss when you're taking your third wave. So this market has manifested third wave. So this entry is just based on the fact that this market closed out on this, retested it. And if it opens above, which means another way you can get in on this trade if you're skeptical is if it breaks up 189.48, okay, get in on the trade. So you can wait right now. Okay, if this market breaks above 189.48 or 50, get in on the trade. You would have a better drift on the upside, okay, compared to entering now. So that's another way for those of you that want to be careful. Okay, did you guys get the trade? You can just take a screenshot. You can see the red is the stop loss, the blue is the overall. Okay, first TP is going to be this high. 192 is first TP. So far, so good. Okay, I think I got a trade on gold that I didn't call. I was looking at gold. I wanted to call it. It's done. I was looking at gold. So if you're not a shy person, can be funny when you're saying that sometimes. If you're not shy, I wanted to call gold here, but well, yeah. Okay. If you're not a shy person, you can actually get in on gold now. Put your stop loss above here and let your TP ride. Let your first TP hit here. First TP is 2492. Let me just, I think I can take that one. Let me take that one now because I'm not in that one. I was waiting for it. The candle was buying. When I was looking at it, the candle was buying. I said if it closed. So let me take gold. Good. So that would be 2493.07. How many of you understand the trade? Stop loss is 25. 2511.90. 249 TP1 2493. All right, good. So that's gold. Okay. Now I'll explain something to you quickly. So gold is on premium. Okay. Now that this trade is not so it is okay. Let me not bug you guys with that. Okay. So this trade, let me do something quickly. I'm going to update gold. So let me update gold. Let me update gold. What I'll be looking for on gold over the next couple of for this week. So gold has a range for a sell that it has broken. This is sell side liquidity. It raided, refused it. It means it has not aligned. What's another high? There's another high here. Okay, gold is in an all-time high. Let's see what it looks like on the daily. Okay, gold is in an all-time high. So it's in a value, it's in a place where it has never defeated this area before. So there's a sell side range here. Okay, I think this is 40%. So how the sell side range? It means over the next couple of days, this is a raid of this area. If market pulls back down, okay, and gives me market structure, lower low, there's going to be, I perceive there's going to be a drop down to this level. So since it's on premium, I'm going to wait for market structure to play out. It hasn't. Okay, so hence it's doing it in 15 minutes. Okay, that's why it's doing it in 15 minutes. So this is the high, there is been a low, okay, and there's been a break of structure. The next break of structure, so this is trading as the next break of structure is going to follow up with some impulsive move. So if you break this structure right now, it's going to come into maybe a fair value gap and we're going to see a drop. And when that drop happens, 1 hour daily will now start. You now look at the daily. If it is, it will be setting up. But right now it's just 15 minutes. Okay. So that's my gold. So on 15 minutes, it has created some level of shift, but they are not liquidity shift. They are not a range shift. The range is here. This is the daily range and the 4-hour range. Every other thing that is here, so there's a range here, very short. This is a short range, but gold is that kind of short move. So there's a sell range here. Okay, if you want to look at this range, it means market took this out. Okay, market took this out, raided, created a low. So this is a shift leg now. So if you're looking at this, if market has created what? The moment it hit here, created a low. So it created a lower high. So the moment market takes this off, you can be sure of selling this area and putting your TP here, because that will not give us this range. Does that make sense? So that's why I'm looking forward. I'm emotionally looking forward for this market to sell, not because it must sell, but that is what can happen in this market. So that is the 3 trades that so whilst you are also taking the trade I've given you, okay, watch out for the break of this and the retest of this or drop down to an impulse down. And when that happens, you can now watch out for the next entry, which is the 4-hour entry or the hourly entry. I'll be updating you guys and the team as it goes. Has it been a beautiful session? Euro USD, I don't have a trade. Okay, Euro USD, I don't have a trade yet, but I have a setup that is setting up. Okay, GBP USD, I have a trade on GBP USD. Yes. Okay, so there is a trade on GBP USD, and I will tell you guys where to get in. Wow, where is my Did I clean? So my screen has not loaded. Oh, or I might have cleaned the setup. Oh, that wouldn't be good. Let me reload. So there's the market is in a sell area right now. I'll show us. I'm actually on a sell on GBP USD. A swing sell. Oh, I cleaned my chart. Oh, this must be very terrible. I cleaned my chart. So, okay. So, Cambry, why do you have a sell there? So, let me show you guys. I've been waiting for this sell and it's there. So, you want to watch this right now. So, this was a sell liquidity. So, this was a sell liquidity, okay? And the market came down to this level. So, this was a sell liquidity. Watch this so that you guys know that it's good to follow the market. Watch this. What was this? The market hit TP. This was a sell liquidity, all right? And the market actually ranged down. So this was the rate of the market and it created a low. Watch out for this low, okay? So if we go to the 1 hour right now, so the sell that happened on GBP USD that you saw over the last week was actually a sell to a range, all right? This was the range. So this was the range, okay? A market did that. How? What did it do? You can see that the market created a wave. Okay, so this is a first wave, break of structure, second wave. This is the third wave and market drop down. Okay, but if you look closely, if I move to the 4 hour, there are some gaps that were created in the market, starting from, if you look at this high, when market drifted down. So between this area and this area, there is a gap. So watch, let me just, where is mine? So market left gap, and gaps are liquidity in the market, liquidity point in the market. So whenever there is any break, so what I'm going to show us, so you guys see what's happening right now. So there's a gap. Whenever there is a break of structure, okay, market will move and normally come to a gap. Since this market started dropping, it has not come to that gap. Are you guys seeing it now? This is the first time it's coming to the gap over some couple of weeks. So it's either it honors this gap, okay, because that's actually the last gap. The next gap is actually between here and here, okay, which it can come, it may not. So that's why I'm taking a trade. That's why I'm on a trade on GBP USD, okay? And if this be the range, it's still this. Market still has the capacity to drop, because if we're looking for a sell, this is still the range. So, but if we're looking at this right now, you may not do as deep as that one. So you can leave your TP here. It's a swing as well at almost 200 pips. Yeah, 200 pips. So this is another one for you guys. So stop loss is going to be above this area. TP is going to be here. I think I've taken that trade. I took it already. Yeah, I took it already. Good. Any questions so far? These are all my trades I've called as swing. And every one of you, you've enjoyed it. All right. Any questions so far? Let me stop this recording and